Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He's former Wall Street trader, and he also runs the popular website, traderschoice.net. Greg Mannarino, thank you for joining me again.
Great to be back. I'm really happy to be with you.
And Happy New Year, since I haven't spoken to you in 2016 yet.
That's correct. It's been a while. I know.
It really has. But there's so many things going on right now, and we're finally getting a gold and silver rally. I wanted to have you back on. I want to before we talk about precious metals and some of the other things going on, I want to talk to you about the Federal Reserve, interest rates, and the bond market, since all these things are basically linked. We've seen the Federal Reserve talk about, trial balloons about negative interest rates. We just saw that with Japan. Do you think the Federal Reserve is crazy enough to actually try raising interest rates anymore?
No, they haven't even raised them at all. I don't care what they say. Look, the proof is right in front of us. Let's look at bond yields. Bond yields have been dropping and dropping rapidly. So they raised the federal funds rate. Okay, well, you know what? It doesn't matter, does it? We've seen interest rates drop across the board. The safety play, think about it. Safety play into debt has been telling, at least to me, about the action we've been seeing here in these markets. I've been speaking about this on my own blog and have been interviewed about it. I think the Federal Reserve, again, in collusion with all of the other world central banks, are in dire straits at this time. What have they tried to do? Well, they've tried to stimulate and print and bury the world in debt, and it's not working. I talked recently about how we constantly hear about tools from the world central banks. The only tool they have is they only have one tool, and that is debt. To expand the debt. They do not, as you well know, they do not create wealth in any way, shape, or form. They only create debt and debtors. So they can talk all they want about how they have raised rates. I want to see it. It's nowhere to be found. We're seeing rates come down because of the dire shape of the equity markets, again, being hyperinflated by a ballooning debt market. And it's just starting to play out, in my opinion, and it's going to get very, very ugly moving forward. I mean, look at this. We've seen this, we're referring to the Dow here, make a steady decline since last May, and we're starting to see that accelerate as it is becoming more clear that this is a systemic issue. The world central banks have deliberately created an environment of systemic risk. Purposely, they are serial bubble blowers. That's all they do. They inflate bubbles and they deflate them. It's a grand scheme. I don't care what anyone says. This is not a conspiracy theory. Just look at a chart. You will see, just go over the past several bubbles. We had the dot-com bubble and burst. We had the recent 2008 bubble and burst. And now we're in this hyperinflated debt bubble. This is what they do. In collusion with our policymakers, this is the way it is. It's a mechanism of theft on a grand scale, unlike anything we have ever seen in the history of the world. And I know that you are more than well aware of all this.
Yeah, I agree. And a debt problem can't be solved with more debt. And you're exactly right about wealth creation. I mean, wealth creation is miners, manufacturers, farmers, entrepreneurs, inventors, finance, helping these guys in the real economy grow their businesses, create value, new products and services, etc. Grow jobs, high-paying full-time jobs, not these bullshit part-time jobs that everyone is reaching out for. But they don't really create wealth. Like I said, they just redistribute the wealth. So the wealth has been redistributed from the middle class in the United States the last few decades with fiat money and easy money and credit. It's been redistributed to Wall Street, the hedge fund managers, and also to government itself because, government keeps on spending even more and more money.
Well, that's the mechanism, isn't it? They have no choice. What people don't realize, Jason, and I know you know this better than anybody else, we have a system here that is dependent on the relentless acquisition of debt in perpetuity. It can never stop. It's the way it's designed. If we stop borrowing cash into existence, the entire thing will implode. That's how it functions. It's not a wealth-based system, and the proof is in front of everyone's face. This is why we have every single developed economy on Earth in debt up to their eyeballs. Here in the United States, $20 trillion in debt. And we have a nation of debtors. This is the way it is. We do not have a nation of wealthy people, a nation of debtors. So, I mean, I don't know what kind of proof people need in front of them. I mean, I can't imagine people are frankly that dumb that they can't see what is right in front of their faces. But the truth of the matter is, they don't see it at all. They have the population of the world, none more so than here in the United States, and I've said this countless times, has been dumbed down to the point of ridiculousness. And this is also part of the machine. They need to keep people distracted. They need to keep people not focusing on what's really occurring. Because if they really knew, things would be a lot different.
I think a lot of people don't care. You know, there's sports on, there's bread and circus, there's reality TV, there's celebrity gossip, there are so many TV shows. There's if you're a woman, there's The Bachelorette or The Bachelor all the time. There's so much stuff going on that most people, you know, they're completely and totally distracted, and then they believe, you know, what they heard from their textbooks and their university professor and what the mainstream financial media is telling them. Mm-hmm. So I mean, there's so many factors going on that, you know, and plus, you know, they want the status quo. They want to be optimistic. They want to believe that, oh, you know, the economy is really recovering, even though, you know, I have a lot of friends in the one of the richest counties in the United States for average median family income. They're working 2 or 3 part-time jobs to keep their head above water. They're not finding these high-paying full-time jobs that the job numbers are claiming to have.
Of course, because they're being fed the line of crap. They don't want to understand that we have, and you know this as well, a labor force participation rate at a 4-decade low, money velocity also about the same, a multiple decade low, and again, what people need to understand is, and I've gone over this so many times, without those just simple 2 metrics I just went over, without a growing labor force participation rate and without money velocity moving higher, you cannot have an economic recovery. It is impossible. So all the line of nonsense that's being fed people through the mainstream, again, it's to keep people in their zombified state here. And all of the shows that you will know, it's the same thing. People need to exist in a fantasy land. If they honestly realize what's being done to them and how the game is completely rigged against them in every way humanly possible. What I had been saying recently, in fact, in my last 2 video blogs on YouTube, my market report, I talked about how people, when this thing comes down, and we're in the relatively early stages of it now, people are going to, the average person is going to be heard screaming from Pluto as their perceived paper wealth evaporates. They've all been sold the paradigm that the stock market is going to continue going higher. It's not going to stop. And they've been, you know, putting all they can in the market. This is part of the scheme here to get people. The Federal Reserve, in collusion with the world central banks, have deliberately created an environment of risk for this reason, because it's a wealth transfer, as you well know. It's as simple as that. This is theft on a magnitude and scale that is hard to get your head around. But this is exactly what central banks do. Again, it goes back to what I said earlier. They are serial bubble blowers. And they do these on purpose over and over and over again. And the solution is not bigger government, like we keep hearing out of mostly the Democratic side here. But, I mean, it's, again, all we need to look at is the fact is that the system is broken. It is not working. It has been twisted and distorted upside down, backwards, and sideways by runaway central banks who continue to make it all worse. Now we have, you know, negative interest rates, like you referred to earlier here. We have, you know, Sweden just went deeper into negative territory. So what are world central banks actually broadcasting, Jason? I think you know the answer. They're trying to tell everyone who wants to listen that the debt is, not only is it worthless, it's negative. So, I mean, this is really what they're doing. They can't stop this. It's the system. Again, this is not a financial problem, and I can't stress this enough. This is a resource issue on a grand scale. This is why they have to continue to borrow cash into existence and find ways, any way possible, to do this. If that means bringing us to war, that's what they're going to do. Because, again, the alternative is too horrible to contemplate. It is a resource problem at its core.
Greg, they're trying to take what's left of people's savings. You know, if people have money at a checking account or savings account at a bank and they're charging you for it and taking it every year, you know, they're taking your savings.
Yes.
So that's what these negative interest rates. These are part of totalitarian governments. They want to monitor every single one of your transactions. They want to tax them all, and they want to take your savings. And you can't have capitalism without having any capital, and capital is derived from savings, producing more than you consume and saving the difference. So if there's not high-paying jobs and you can't have any surplus, which is where you get savings, you can't really have capitalism then. My next question for you, Greg, is about stock market crashes. Do you think some of your trader buddies who still work on the trading pits, do you think they're scared of another stock market crash and how, like, you know, there could be a worse thing than Occupy Wall Street?
Well, I can say this. As a trader, this is opportunity for people, and people don't understand what is being set up here. Yes, I talk to people every day, friends of mine that are traders every single day, and we look at this and we say, okay, well, you know, if this is the situation, they're going to bring this market down. We're going to look for opportunities to take advantage of it, just like they are. And they're not stupid. You know, everyone who's got even the slightest clue understands where this is going. This cannot be stopped. The market has no reason to ever, again, well, maybe not ever in the history of the world, but ever in the next several years reach all-time high. I think the trajectory here is lower. I think people need to be looking for opportunities to trade this market lower. And again, it's not going to go down linearly. So I want people to understand that who are listening to this. Could it go higher tomorrow and the next day and the day after that? Absolutely. But that doesn't change a thing. In fact, I believe the market is going to bounce in the next several days. And I'm already taking up a position to try to capitalize on that. But the longer term here is lower and much, much lower. Sorry about that. That's the way I see it at this time.
Yeah, Greg, the technicals, when I look at the long-term charts for the Dow Jones Industrial Average, the ETF there, and for the S&P 500, it seems like they're making lower lows and lower highs. So, yeah, the topping process looks like it's already well underway. Now, in terms of the gold and silver manipulation, it looks like we have started a bottom, but, you know, the gold and silver markets have gone down a lot, especially the paper markets. Do you think a lot of these Wall Street traders, you know, knew that gold and silver were manipulated, you know, in off trading hours and that they just hopped on the trade? They piggybacked the trade. They knew that the paper markets were going to get shorted. They jumped on it, and then they said, you know, I know it's manipulated. I don't care. I'm going to make money on this, and then I'm just going to, you know, buy metal, physical gold and silver with the profits.
Absolutely. I think people are doing that. I myself so rarely will trade the paper markets because they're not real. There's no price discovery mechanism there whatsoever. It's absolutely fake, as you know. And as you also know, I have been an advocate of hard assets since forever now. And that's what I've been telling people. Bet against the debt and become your own central bank. That has been my theme since I sat in front of a computer and started talking about all this blogging. So, again, we're going to witness what we've seen last time, and that is the stock market continue a downward trajectory, and we're going to see precious metals rise. And at one particular point, I do believe beyond any shadow of a doubt, we're going to have extremes on both ends. And why is that? Because it all is linked to the debt bubble, which is not sustainable. And I don't care what world central banks try to do to keep it propped up, it will not work. Every single bubble that we've ever witnessed rises above a level that can be sustained by any means. So again, no matter what they try to do, and no matter how hard world central banks attempt to turn this system upside down by negative interest rates or whatever other scheme they're going to come up with, it will not stop the debt bubble from bursting. So what I want people to understand is, what does that mean in the grand scheme of things? The debt is worthless. So over time, we are going to see yields spike extremely high because, again, it's worthless. Then you're going to get massive amounts of pressure here on equities, and all this cash is simply going to look for a place to go. It doesn't go to money heaven. It will go into hard assets. And that's why we're going to see a super bubble, in my opinion. It will turn into a bubble, unfortunately, with regard to the paper markets of gold and silver, which will obviously vault the hard asset as well. But this is going to happen at one particular time. So people need to start understanding how the system works and how to bet against it. And betting against it means becoming your own central bank and, betting against this debt.
One of the largest warning signals I see, Greg, besides the negative interest rates and the stupid stuff the central banks continue to do, is the stock charts of the banks. I did a video about this last week about Deutsche Bank. Not sure if you've seen any of the bank charts or the XLF lately or any of the banking ETFs, but they're really ugly. In fact, they're almost back to 2008 levels, but the mainstream financial, you won't hear that on the mainstream financial media. You'll read articles coming out from Barron's talking about now's the best time in decades to buy bank stocks. Do you think then the bank stocks and the charts on those are signaling then that there's a big crisis coming very soon?
Absolutely. The biggest signal to me is the bond market. Like we started talking about, look at bond yields. That is the biggest signal to me on that I could possibly imagine. When you see that quote unquote flight to safety like that, I mean, at such a rapid pace, you can just project where things are going to go. And that's what I've been warning about for the past several weeks, and that's exactly what we've been seeing. So, and we're also seeing this, the precious metals rise as well. Look, I think that's where people need to understand that. Look at the paradox there. At one part, you have of the spectrum, you got all these investors going into debt, buying debt. And at the other end of the spectrum, you have people buying wealth. In other words, you have people buying the debt market, and you have people buying real hard assets. So who's right here? Well, gauging from what we've been speaking about and having a basic understanding that this debt is in a bubble, well, you know where you need to be. It's that simple. People like you and me have been warning about this for years and years, and I think we're at a tipping point right now. I really do. Market has rolled over. It's been in a downward trajectory for months. There's no reason for this to turn around. We are in a global slowdown where world central banks continue to become more and more desperate, and we're not done at all seeing what their desperation is going to get much, much worse moving forward here. And we are going to see things with regard to the human population. Again, the debt bubble has caused a human bubble, a population boom. And these are going to correct in tandem, Jason. It's going to be a very ugly picture.
Yeah, that's very interesting, in terms of that with the debt. Also, cheap oil has contributed to a population explosion too. Once oil became very cheap, the world global population started to explode. I think before the Industrial Revolution and petroleum products started and gasoline and stuff, the world population had never really gone much higher than 1 billion. Now we're over 7 billion. So I mean that's an exponential growth function. And as Chris Martenson, I'm not sure if you're familiar with his work, but Chris Martenson says any exponential function cannot go on indefinitely. No. Infinitely.
Absolutely not. Absolutely. And that goes, and unfortunately, that goes back to, again, the population issue. That people understand at its core. What I'm urging, I wrote an article a while back called Global Debt and the Human Bubble. I urge people to just Google that title, Global Debt and the Human Bubble, and they can get a better understanding of how these are directly connected.
So what do you think then is the solution then for someone? They should, for being their own central banker, should they be storing food? Should they have cash outside of the banking system to protect against a cashless society? Should they be storing physical precious metals and guns and ammo? What's your opinion on these things?
Absolutely. There's no doubt about that. They need to be, getting out of their paradigm, the one that they've all been told to believe in, because it's coming apart now. The systemic toxicity is global at this time here. And again, people are so fixated on their own little worlds, but they need to understand what this is occurring everywhere. We're seeing this debt bubble manifest its ugly head everywhere. And world central banks have lost control. And how do we know they've lost control? Because they've gotten so desperate again, Jason, that they've gone negative. And they're going to get deeper negative into territory. Janet Yellen just today discussed the possibility, although she said it would be remote, that the Federal Reserve would go negative. They are going to go negative at one time. There's no doubt about it. In my opinion, they are going to become that desperate as well as the market continues its trajectory lower. Are we going to see a bounce? Of course we are. It'll go down. then make a little recovery.
Suckers rallies, right? Dead cat bounce, suckers rallies.
So, and I hate when people say, "Oh, well, look, it's up today," and they said it was good. Come on. I mean, these people either they have an alternative agenda or they have absolutely no clue. But that's
I did a video on this about the bank stocks, and the mainstream financial media, the reason they're saying the market's up is their sponsors are the financial companies. So of course they're going to say now's the time to buy the bank stocks, right? And now's a good time to buy the dip on all the stock market because they're financial service companies. They need to sell those mutual funds. They need people to go out there and buy those bank stocks that everyone else is dumping right now.
Exactly, and they won't talk about the fact that gold is up 17% this year. They won't talk about that. They can't allow people to understand what's really occurring. I heard some trader today on CNBC or Bloomberg or one of these things talking about when people don't know what to do, they buy gold. I mean, no, it's quite the opposite. When people know what to do, they buy gold. I mean, where do they come up with this stuff?
Well, they're just trying. Well, it's like those gold as a pet rock articles that came out like during the summer, and every couple months from someone in the mainstream media, financial media or mainstream finance, there's always like anti-gold articles. But I mean, gold's insurance, so I mean, you should at least have some insurance for your portfolio. Although I don't think people should own a lot of general stocks right now unless they have hedges in place with maybe puts or things like that. And I think people should have a lot of cash. They should definitely have some cash outside of the banking system. I know. A friend told me today, actually, Chris Martinson just sent out an email and text warning, I think, to his paid subscribers that people should go to the ATM and remove a certain amount of cash immediately from their bank, just in case, there's a bank closure in the next couple of weeks.
Absolutely. There's no reason for people to have large amounts of cash in any kind of account. It's doing nothing. It's earning nothing. It's a dead investment, in my opinion, to be invested in dollars. At this time here, people are buying yen now. You know that, it's insane. Where's King Dollar? Well, King Dollar is losing its throne big time.
It's really weird because Japan tried to devalue the yen drastically, and then the yen's going up because no one wants a strong currency. Everyone's trying to devalue, so we're back in another round of currency wars. But what I think is happening is so many sovereign wealth funds have been dumping, U.S. Treasuries lately and also their own stock equity portfolios because most of those sovereign wealth funds are oil countries. So those economies are hurting. They need to dump their treasuries and also their equities in order to raise cash. So to protect their own economies from collapse. So they need to find buyers. And what I think the Federal Reserve has done is they've gotten, Japan to pick up the slack of the treasuries that were dumped. And Japan printed off more yen to buy up treasuries. And they were trying to devalue their own currency, and it didn't work that well. And I think they're putting Europe on the hook to buy more treasuries too. It's kind of, what the Romans used to do with like their annexes, that when they invaded another land and took it over, how they forced them to pay tribute and other stuff.
I think you're right. Look, there's no doubt in my mind. I mean, I believe that your listeners are smart enough to get it. That, these world central banks do not act independently of each other. They all know what they're going to do, when they're going to do it, and how they're going to do it. Because they're all in the same boat here at this point. They've created an environment on purpose. Again, people have to understand. This is done on purpose. They inflate these bubbles and they burst them on purpose. To fleece the middle class, to erase the middle class. That is the goal, to create a two-tier society, period. Here in the United States as well, unfortunately, and we're seeing that. There's no doubt about it. So, I mean, it doesn't look too good, I think, from that perspective. But again, there's always opportunity here, and I think the greatest opportunity of them all, at least as far as I can see, and what I've talked about for many years, and I still stick by this, is if I had to pick one asset and only one to be invested in at this time, and obviously I'm invested in a lot of things, but if I had to pick one, it would be physical silver, Jason. That, to me, is the most undervalued asset in the history of the world.
We're going to have a lot of physical silver shortages if demand either increases or stays at these levels and the silver price doesn't start to rise. There's going to be a lot of silver miners that can't deal with their costs, that haven't cut their costs fast enough. They have too much debt. So there's going to be physical supply problems from the miners coming soon, although, silver has started to have a nice rally. One of my buddies, Eric Dubin, who does the Welcome to Dystopia podcast with me, he bought some SLV calls a few weeks ago, and he's already made a couple 100% on them. I think he cashed out part of his position at a big profit.
I'm sure he did. Bravo to him. He's got a lot more guts than I do right now, because I tell you the truth, I don't even trade that stuff anymore. I think it's just so not real. And again, there's no price discovery here whatsoever.
Trying to bet on exactly one direction because of the computers trading back and forth with the high-frequency trading, I think the one thing you can bet on is volatility, because these stupid high-frequency trading programs that are now set up, they create so much extra artificial volatility. It's just not their average retail person can barely tolerate it.
Yeah, no, a guy like myself, I don't compete with these people. They're in a totally different realm. I'm a short-term trader. I'm not a day trader. I think it's extremely hard, if not impossible, for someone to make money day trading. In fact, I've never known one successful day trader. Are there times where I trade in one day or two? Of course, but for the most time, I'm looking the time period of like weeks. These high frequency programs, they don't always make money either. They do not always make money. It's a big, people have a kind of a distorted understanding of how they work. Guys like me, we don't compete with these people. High frequency traders compete with other high frequency traders. And again, they don't always win. So, that's something else maybe we could talk about down the line. But I don't think it pertains to the regular guy or girl out there who has no conception of any of this stuff or how it really works. But at its core, people just need to understand that the system is rigged against them, but there are ways that they can understand and take advantage of it and realize where we are now and how we got here and what the grand plan is. The grand plan is simply, again, for the world central banks to create bubbles. That's it. They're not here to maintain price stability. They're not here to maintain a sound system. They're here solely to redistribute wealth in one way or the other, and that is by inflating and deflating bubbles. It's that simple.
And that's well put. And I think we can end the interview on that. And, it's good to finally see, even though it's paper prices, Greg, it's good to finally see the gold and silver price start to go higher again. The cyclical bear market finally end. Maybe the bull market has started again. And for the mining shares to finally go back up.
Exactly. I agree.
Well, I want to thank you again for your time, Greg. How do our listeners find your work?
Well, just go to my website, traderschoice.net. That'll take to my projects here. One of them is my market report, which I do most weekdays. And I also have a new thing called Trade Game. I started doing videos there trying to teach people how to trade options. In fact, I did a video there today for the first time in a while. But it's just my site, traderschoice.net. It should take you wherever you want to go.
Okay, great. Well, thanks again for your time.
Great to be here. Thank you.